Imagine if I were to explain to you now why I think the market is poised for growth, relying on Larry Williams' analysis. Larry Williams is a respected trader and technical analyst who has a deep understanding of market dynamics and has developed a number of innovative technical indicators. He recently made a compelling argument for why the stock market could be on the cusp of significant growth. We look at his analysis, which includes technical, fundamental and seasonal factors that could support this growth, as well as the potential impact of the current economic situation, such as trade tariffs and oil prices. Larry Williams bases his analysis primarily on technical indicators that he has developed and refined during his long trading career. These tools provide a powerful framework for understanding market momentum and potential turning points. One of the key indicators he uses is Williams' %R momentum indicator that helps identify overbought and oversold conditions in the market. Values closer to 0 indicate overbought, while those closer to 100 indicate oversold. And right now, %R shows that many stocks are in an oversold range, indicating a possible upside reversal. Another important tool Williams uses is the ultimate oscillator. This tracks price momentum on multiple time frames, helping to minimize false signals in turbulent markets. Recent readings of this indicator suggest that momentum is building, which could support market growth. Similarly, the volatility channel, which monitors volatility and identifies potential trend reversals, suggests that we are approaching a significant turning point that could signal the beginning of a bullish trend. Although technical analysis forms the basis of Williams's prediction, it also relies on fundamental indicators. One of the key factors is strong corporate earnings growth in the U.S. and emerging markets. For example, earnings growth in the U.S. reached 9% in 2024 and is expected to rise to 14% in 2025. Large technology and communications companies in particular play a significant role in this growth and form a solid basis for market optimism. In addition, other economic indicators confirm the positive outlook. For example, real wages are rising and the labor market remains strong. While inflation is still a challenge, the Fed's interest rate cuts could create favorable conditions for market growth. Williams also looks at seasonal trends and cycles as these play a key role in predicting market movements. Historical data, for example, shows that stock markets tend to rise towards the end of the year. The so-called year-end rally has been observed in 68 of the 96 years between 1928 and 2024. Quarterly patterns also suggest that the last quarter of the year is often volatile but also provides opportunities for growth, which is consistent with Williams's prediction. Of course, the broader economic environment, such as the impact of trade tariffs and oil prices, must also be taken into account. While the current tariffs imposed by the United States on imports from Canada, Mexico and China bring uncertainty to the market, they can also create opportunities in certain sectors. The relationship between oil prices and stock markets is complex, but in times of economic turmoil the link between the two tends to be stronger. Williams is therefore likely to take into account current trends in oil prices and their potential impact on market sentiment. If a rally is indeed imminent, certain sectors and stocks could outperform others. Historically, technology firms such as Apple and Microsoft have thrived in growth periods as they benefit from increased capital spending during economic expansions. Similarly, the consumer sector, such as Amazon, could benefit from improving sentiment among consumers. The financial sector could benefit from rising interest rates and increased demand for credit, which could support the stocks of banks such as J.P. Morgan Chase. Industrial companies in the aerospace, defense, construction and transportation sectors could benefit from higher capital spending, while the basic materials sector could benefit from a late-stage economic expansion. All in all, Larry Williams's analysis combines technical indicators, fundamental signals and seasonal trends to make a compelling argument for the market's impending rise. Although factors such as trade tariffs and oil prices add a degree of uncertainty to the equation, the combination of positive signals suggests that investors should be prepared for potential market growth. As always, however, it is important to conduct thorough research and consider your own risk tolerance when making investment decisions. And that's it. If you liked the video, give it a like and write in the comments what you think about this analysis. Don't forget to subscribe so you don't miss out on more interesting insights into the markets. Thanks for watching and see you next time.